you're watching Buy Now, Sell Now on ET Now with me, Shreyanshi Singh and Snehisha. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at the market. And a decent day in trade coming in for the markets, the auto, realty, even IT holding on to some resilience at this point.
Well, looking good, absolutely. That's what the market is shaping up to be like. Hi there, good morning. Let's take a look at what the markets are doing right now. And Nifty, a 0.5% recovery coming in from the day's lowest point. 0.3% higher right now as well. Looking comfortable above that 23,800 mark for now. So looking good. And let's take a look at what the Sensex is up to as well. Looking good for the Sensex also. It's been rather steady ever since the get-go. And let's take a look at what the broader markets are also doing right now. Let's pull up a Nifty mid-cap, Nifty small-cap, Nifty bank, however, reeling with some pressure coming in, 0.1% lower. So not much to worry about for now, at least on that mark. Nifty mid-cap doing pretty well, 0.3% higher. So largely in tandem with what the Nifty is doing. Let's pull up a Nifty small cap too, and that seems to be outperforming the market right now. Remember, yesterday Nifty small cap was the beaten down index that was underperforming the street. Today it seems to be doing better than the rest of its peer indices. 0.5% uptick coming in on the Nifty small cap index as well. Sectorally then, everything is looking good right now, barring metals. Metals seem to be slightly under pressure. 0.6% cut coming in on metals on the back of sale. JSW Steel, NMDC and Tata Steel. These have been dragging the metal index lower, and you have Nifty bank and financial services that are slightly under pressure. Other than that, on the winning side, Nifty auto seems to be doing very well, a roughly 1% uptick coming in on Nifty auto. Followed by that, you have realty, energy, FMCG, IT, pharma and PSU banks in that pecking order. These are your top winning sectors for the day. Largely, all in all, looking good for the market, and yeah, looking comfortable above that 23,800 mark for now, at least on the Nifty. Let's see where we're headed today.
Well, absolutely. Realty and auto holding on to some strength at this point. Let's see where we're headed. But before we do that, and before we kickstart the show by taking all of your stock-related queries, time to take a look at the number that you can write to us at on the top of your screens as well as on your screens. Now, remember that you can, when you do write to us, do mention your buy price for the stocks that you're already invested in, and for the ones that you're hoping to invest in, do mention the time horizon that you then have in mind as well. But with that, let's kickstart taking all of your stock-related queries. And for the first query, Kunal, I'm going to come to you. We have Kunal Bothra joining us on the show. Kunal, the first one that we have is coming in from Raj Gopalan, who's asking you what the best picks you think would be in the PSU banking pack for the next 2 to 3 years. What do you make of this?
So again, an interesting query, but I would believe that sticking to the larger cap names would make a lot of sense over here. So we've seen the likes of Bank of Baroda, SBI to be a lot more sideways, choppy, at the current last 3-6 months of price patterns. So I would probably believe that these two could be formidable names. In case if you're looking to add some of the high beta stocks from the PSU banking names, that's the mid cap end of the banking stocks, then I would believe the likes of Bank of India, Union Bank, these could be additional names which you can look out for. So the entire pack looks to be strong. My belief is that over the last 6-8 months, what we've seen is a natural mean reversion or a mean retracement for many of the PSU banking names. Believe over the next 3 to 6 months, you could probably see a substantial upside for many of these private sector PSU banking stocks. So I believe start off with sticking towards large cap PSU banking names, and then once that kitty is filled, I would believe that then adding towards the mid cap into the PSU banking stocks could be another strategy which you can look out for.
That's Kunal's view coming in on how to play the entire PSU banks basket. But Kunal, this viewer query is coming specifically for you as well. Coming in from our viewer Gaurav Mohindra from Indore. He's saying he has bought 2,000 shares of REC at a buy price of 455 rupees per share. And he's asking for a short-term view on this. What should his strategy be going ahead for the short term? And what levels are you spotting for this stock on the charts?
See, I think it's a very interesting chart for REC. The stock has been doing exceptionally well over the last 3-4 years from the COVID lows. Price adjusted, I think there's a special situation for the stock. But then adjusting to that, it's almost been like a 5x or 8x or a 10x kind of a stock in the last 4 years. I think on the shorter term charts, the stock is also poised pretty well. It's retesting a major support point. So for the last 4 months, from September, October somewhere, the stock has been retesting levels of 500. There have been breaches to that 500 mark on an intraday basis, but more or less this 500 level has been a strong support. Since you purchased at a price of 450 thereabouts for REC, I would believe that keeping a trailing stop loss of 500 on closing basis could be a good strategy. In case if the stock doesn't break below this 500 mark, and if it bounces back, then I believe that over the next maybe 3 to 4 weeks, you could expect a target of at least 580 to 600 also for REC Limited. So having a trailing stop loss of 500 on closing basis could be a better strategy for a target of 580, 600.
All right, and that's a take coming in as far as REC is concerned. We also have Rajesh Agarwal, Head of Research at AUM Capital, joining us. Rajesh, good morning. The first query that I have for you is coming in from our viewer, who's Chaitanya from Hyderabad, in fact, who's mentioned IRFC as well as IREDA. Now, he bought IREDA at 250 levels and IRFC at 98 levels thereabout. He's not mentioned how many shares he's holding on to, but what do you make of these two counters then?
Good morning, everybody. Taking one by one, IRFC and IREDA, both are good companies for long term. As far as IRFC is concerned, they are into financing railway projects, and going by the way the government is focused on improving railway infrastructure around the long term looks good. Although in the short term, despite the fact that it has corrected from its top, I think there is some more correction left into that. So if somebody is willing to hold for maybe next 1 year or so, it can give good returns from the current market price. As far as IREDA is concerned, it's into renewable financing. It's a good company, but when I look at valuation and compare it to PFC or REC of the almost of the same peer group, I think the valuations are somehow stretched. It would be advisable to book some amount of profit at this point of time, maybe re-enter at lower levels, maybe around 10% below the current market price.
Okay, that's the view coming in on IRFC and IREDA. Kunal, coming back to you, this question is coming from our viewer Swati, and she is advising your opinion on Emami. She currently has a loss of 25% in her holding of Emami, and she's asking, would it now be a good time to buy Siemens or Varroc Engineering? What's your view here?
So yeah, I think it could be a good strategy to shift, and I think if you're looking out for either of the two names from Emami towards Siemens or Varroc, I would believe Varroc could be a better chart. The stock is seemingly coming back into a recovery board. There are two things which are positive for Varroc on the charts. One, on the weekly time frame, the MACD has come back into a positive territory from being an underperforming territory for the last 3 months. So which means that there could be a potential sign of a turnaround. The stock on the short-term charts, has come back above its 200-day moving average, and we've seen volumes, shaping up positively for Varroc over the last, 3 weeks, two weeks specifically. So I believe that could be a very strong signal that we may be at a cusp of a turnaround as well as an end of a corrective phase for Varroc. So I think that could be a much better bet, especially compared to the existing stock which you're holding for Emami.
All right, and that's a take coming in as far as Emami is concerned. Tell you what, Rajesh, I'm going to come to you with the next one because Nikhil Sharma is writing to us from Mumbai, wants to know about the 20 shares of Axis Bank that he's holding on to. Now, the buy price was higher than the current market price that we have. So 1,157 is the buy price that I'm talking about. He's in a loss right now. He's asking if he should book losses at this point or continue to stay invested for the long term then.
Long term, of course, you can continue. Not only continue, I would say if your funds allow, you can even add to that. The numbers have been good. Asset quality has improved. There's some issues on the NIM front, but once I think RBI starts cutting rate in the next meeting or the even after in the second next meeting, I think things will start improving. So it's better to accumulate banking stocks at this point of time. Going forward, I think they are going to do very well. So it's advisable to continue to hold, and if your funds allow, you can even add.
So that's the view coming in on Axis Bank. Nikhil, I hope that answers your query. Kunal, coming to you now. Next query coming in from our viewer Vignesh from Bangalore. He's looking to buy Natco Pharma at the current price. He's asking, would now be a good time to buy? Should he wait for the stock to fall further? Because last 5 trading sessions, this stock is lower by roughly 1.5% to 2%. So let us know what your view is. Are you expecting slight bit of a consolidation more, or would now be a good entry point to Natco Pharma?
So you can't expect a major correction to the stock, especially over the short to medium term charts, because over the last 3-4 months, the stock has been more resilient and trading into a range. Now, the support, of course, for the stock is around the 1330 mark, which is a previous swing low for, the stock in the month of November. But then, looking at the volumes and the structural change in the pattern, I don't believe that the stock may break below the 1330 levels. So which means what you can do is you can have a two-pronged strategy over here. You can buy maybe 50% of your expected quantity at current levels and wait out for maybe another 2 or 3 trading days. In case if the stock dips down to 1350 levels or slightly below those points, you can look to average further.
All right, so Two-pronged strategy is what you should have in mind when it comes to Natco. Then that's the word coming in from Kunal. The next one that I have for you, Rajesh, is coming in from Molly, writing to us from Bengaluru, wants to know about Infosys. She's holding on to 480 shares at a buy price of 900 rupees each. What do you make of this one? Because she's a long-term investor, so she's okay to stay invested, but she just wants to know what the fundamentals then look like for the stock.
This is a very good stock, I would say, and going forward, IT is going to do well. Once we have seen Fed cutting rates, and with this, discretionary spends are going to go up. And as far as Infosys is concerned, in Gen AI and all, they are doing very well. Order book is good. They have seen good order inflows coming in. And with a very strong balance sheet, I think it's one of the stock which one should continue to hold. Not only continue to hold, it's ahead from a side for next 12 to 18 months. So it's a hold from a side.
Whole call coming in on Infosys, but on that note, viewers, we'll take a break and keep it going with all your queries on the other side. Keep writing to us on the number that's flashing on the top of the screen, and Kunal and Rajesh will be on with us, and we'll be right back. Hi there, welcome back to Buy Now, Sell Now. Thanks so much for staying tuned to ET Now. Viewers, keep writing to us. Keep sending us your queries on the number that's flashing on top of your screen. We'll be addressing them with Kunal and Rajesh, who are back with us once again on the show. Rajesh, coming to you now. Our next query is coming in from our viewer Satya, and he's talking about Heritage Foods. That's the stock his query is about. He has about 1,000 shares of Heritage Foods at 510 rupees per share. He's asking, would now be a good time to average that stock, or would now be a good time to do a complete exit out of that stock and switch his stake for some other stock? And if you would recommend a switch, which stock would you recommend that for? His time horizon is 9 to 12 months.
See, we have seen volumes being dropped in FMCG stocks, be it HUL, be it Dabur, or be it Heritage Foods. Everywhere volumes have been dried up in the latest quarter numbers, and I don't think there would be any change in volumes in the near future, of course. But having said that, I would say Heritage Food is a good company with good, strong brand profile. And in the long run, it can give you good return. But at this point of time, no point in adding new money into FMCG products, except it's an exceptional company like ITC, one can add. Otherwise, I would say continue with Heritage Foods. Whatever new money you want to invest in FMCG, you can buy ITC. Or if in other sectors you want to have, you can go for metals like Lloyd Metals or Jindal Steel and Power. These kind of companies, but for Heritage Food, it's a hold for at this point of time.
All right, and that's the take coming in as far as Heritage Foods is concerned. Kunal, I'm going to come to you with the next one because Manivanan is writing to us from Bengaluru, wants to know about a couple of counters, Vedanta and Tata Motors. And in fact, Tata Motors is one counter that makes it to every single edition of Buy Now, Sell Now because it's quite the favorite coming in for queries. What do you make of both of these counters for fresh buys then?
See, I would believe that, I'll start off with Tata Motors because a stock which has fallen down by more than 40% in the last three to 4 months. I think from 1150-70 levels towards a point where the stock was just retesting the 700 odd mark in the last few trading sessions. So it's been a very sharp correction, of course, for a stock like Tata Motors. But historically, we've seen that when large cap names, when they go into such sharp phases of correction, there comes a point where the risk reward becomes very attractive from a long term play. Now, there could be a short term correction, there could be pause, there could be consolidation, and there could be a phase where the stock may remain stagnant. So, from a short term wise, I don't expect a major recovery coming back into Tata Motors, at least over the next 1 to 2 months or 1 to 3 months broadly. But I think at current levels of 700 thereabouts, it's a very good risk reward if you're a long term investor, because any kind of a dip from here on would start to make the stock look very attractive from a long term play, because 40% corrections in large cap stocks are generally considered to be very good entry points, especially from a long term play. Coming back to Vedanta, I think that's also another stock which is recently coming back. I think from 525.25, it's corrected back towards 470, 475 levels thereabout. I believe it's a very good entry point for a long-term investor for Vedanta as well.
Okay, so that's the take coming in on Tata Motors as well as Vedanta. And Rajesh, coming to you now. Next query coming in from a viewer, Sridhar from Bangalore. His query pertains to two stocks, CDSL as well as Scams. Now for CDSL, he's bought 550 shares at 1,720 rupees per share for the short term. And for Scams, he's bought 100 shares at 4,350 rupees. His question to you is, should he add more when it comes to both of these stocks, or is it time to book profit? What's your view on both of them?
So depending on your time horizon, I would say if it is a long-term horizon, maybe for the next 12 to 18 months or even longer, yes, you can add CAMS, CDSL or a BSC. All these stocks are looking very great due to the fact that equity market is growing. We have seen SIPs being added to mutual funds. These things are we're doing very well. So I think when you talk of CDSL, the number of depository participants and the number of demat accounts addition has been mind-boggling in the recent past. And with the new products coming in like insurance and other things being dematerialized, I think they have a huge future going forward. And not to forget the listing fees which they get, that's an annuity business from the listed companies. So everything goes in favor of these companies. If you have a long-term time horizon, you can add all these stocks. Maybe in a SIP mode, it would be prudent to add in a SIP mode because that way you can average your prices. So it's an ad from our side, all these stocks.
Ad recommendation coming in on CDSL from Rajesh there, but the next one that I have, Kunal, is coming in from Saindranath, who's a senior citizen, writing to us from Hyderabad, wants to know about Castrol, that he's bought 500 shares of, buy price is 271 rupees, which is just about 70 rupees higher than the current market price. What do you make of this counter? Should he exit or average at this point?
I think you should look to hold on to the stock as of now. I would suggest an averaging out once the stock breaks past above the 220 levels, because that coincides with the 200 DMA for the stock price. The stock did exceptionally well previous quarter when the stock moved up right from 180 levels to 280 mark. And this last 2-3 months, like many of the mid cap names have gone through a correction, this stock has come back to that starting point of the rally. But I believe that eventually when the stock breaks past above its 200 DMA, the trends would begin to be a lot more positive for Castrol. Since you've purchased at a much higher price, I would suggest averaging it out. Once the stock reconfirms the breakout, that should be closer to 220 mark or the 200 moving average for the stock at that point of time.
Coming in on Castrol India, but Kunal, coming back to you because this viewer query is specifically for you, and this is coming in from Mr. Radha Krishnan from Bangalore. He's a senior citizen and he's holding 10 shares of ABB at 7,600 rupees per share. He's asking if he should continue to hold, book a loss, or would now also be a good time to further add 10 more shares of ABB. That's the query coming in. What's your take on this?
See, long term wise, it's a very good stock to hold on to, but it's just that the concern for the stock is that the charts indicate that there is breakdown of sorts, for the stock. Now that indicates that the stock may get into a further round of correction. There's also an event of a bearish crossover where the 50 DMA has crossed below the 200-day moving averages in technical terms, but that indicates that the stock may go into a further leg of correction over the very short term, which means averaging out at current levels may not be a good strategy. Now, in case if you're looking to maybe add on to other quality names, I would suggest look at buying Trent at current levels of 7,000 thereabouts. I think it's a stock which had corrected more than 20% and is now looking very attractive. So I would suggest that if you're looking to reallocate the capital, then you can look at other stock. But if you're looking to average ABB at current levels, may not be a good price at current zone.
Alright, and that's a take coming in as far as ABB is concerned, and where else you can invest that capital then. But the next one that we have is coming in from Padma Siva Rao, who's writing to us from Bengaluru, wants to know about Canin Homes, 20 shares at a buy price of 766 rupees. Rajesh, what do you make of this one?
Strong company, good prospects, doing very well, asset quality good, enhance have improved. One can continue to hold, but then I would say there are better choices in the same space. Maybe you can switch to LIC Housing Finance that's trading at a much better valuation than what Canin Homes is at this point of time. So you can continue with Canin Homes, but I would say that LIC is a better option.
Can continue to hold, but LIC is a better option. That's the take coming in from Rajesh for Canin Homes. Let's move on then. And Kunal, next query coming in from our viewer Vidya from Bangalore. She's holding 100 shares of CESC at a buy price of 188 rupees per share. She's asking, should she continue to hold? Can she exit this holding and switch to Tata Power instead? Or should she continue to add some more in CESC? So what's your answer to her query?
Well, I would believe that you should hold on to CESC. Now, this could be a tricky stock because I've been tracking the stock from 110, 120 levels towards a point when the stock had broken past about 200 very recently, I think 2-3 months back. Now, over the last 2 months or so, the stock has been a lot more choppy. It's been trading into a range of 200 plus 205 thereabouts as a resistance on the upside and closer to 175, 180 as a major support. Now, what I've seen over the last 2-3 months of this choppiness is that whenever the stock moves up higher, it is on the back of much higher volumes, both in terms of delivery as well as in terms of trading activity. And whenever the stock gets into a correction, the volume activity drops down significantly, and you've seen the stock dragging into a corrective or a consolidative mode, which means that whenever the markets come back into a strong recovery mode, this could be a stock which would eventually get into a breakout zone. So I think it's a matter of time. Since you've purchased at slight higher levels, I would believe that averaging out maybe closer to 175, 180 zone could be a better strategy for CESC, and hold on.
Alright, and that's a strategy coming in for CESC then. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries, viewers. So see you on the other side of that break. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock related queries. And the next one that I have, Kunal, is coming in from Veeramal, writing to us from Vellore, wants to know in fact about Bank of Maharashtra. 500 shares at a buy price of 58 rupees. What do you make of this counter then?
Well, looks to be quite okay on the charts on the short-term basis. The stock is still into a range. 50 and 60 broadly is the range for Bank of Maharashtra. As I mentioned earlier, that the PSU banking lot, they would start to look very attractive in terms of risk reward. So Bank of Maharashtra went into a correction from 70 rupees, I think in start of 2024, April, May, thereabouts, towards the point when the stock fell, sub the 50 mark, and it's now bouncing back from those 50 levels, which means that after a sharp correction of more than 20-25%, the stock has now come back into a recovery mode. The only confirmation of a breakout for Bank of Maharashtra would be once the stock crosses the levels of 200 DMA, that's around 60 or 58 rupees for the stock price. So I would suggest to hold on to the stock as of now.
Okay, so that's a whole call coming in on Bank of Maharashtra. Let's move away from that query and let's take the next query coming in from our viewer Jay Krishnan from Kerala. He's asking at what level can he buy Coforge for the medium term, Rajesh? What's your view coming in on this stock?
I think it's the right time to buy because it's already corrected from its high, and at this point of time, I think there is no harm in buying if you are buying for a long term. Short term, nobody can predict except for technicals because there might be various reasons for the stock to move. But for a longer term horizon, it's trading at a good levels. I think the numbers have been good, and going by the prospects of IT industries in the coming days, we think one can add to the stock.
Alright, and that's a take coming in as far as Coforge is concerned right there. But the next one that we actually have, Kunal, is coming in from our viewer who's mentioned their name, N. Lakshmi, actually wants to know about Roli Mobile, holding on to 60 shares. Buy price is 854 rupees per share. What kind of future prospects are you penciling in for this one then?
See, I think it's a good time where you can look to book profits into the stock price because I believe that the stock still goes into a sideways to corrective zone. Now, since you've purchased at 850 short levels for Root, the stock is at 1390 thereabouts. I'm not sure if it's adjusted towards any kind of special situation, but I think if you're sitting on good profits of more than 40-50%, I think it could be a very good time for you to book profits over here.
Okay, so that's the call coming in on Roli Mobile book profits. It's the call coming in from Kunal right now. So Lakshmi, I hope that answers your query. But let's move on and take the next query. Rajesh, this query is coming in from our viewer Hitesh from Jamnagar. He's holding Asian Paints and he's holding 22 stocks of this company at 3,200 since the last 3 years. He's asking if it's okay to hold for the long term. This stock has been in a downtrend for quite some time now. Should he average this out or do a complete exit, or now that it has fallen so much, would it now make sense to add a little bit more? What's your view here?
Yeah, adding at this point of time is out of question because the numbers have been pretty bad, I would say. It was out of anybody's expectation, the kind of numbers that came in September quarter. And that was despite the fact that crude was trading at around 70 to 75 odd dollars. So what will happen if crude flares up? First, second, the huge competition is being built up in the entire paint industry, be it Grasim, be it Astral, be it JSW, everybody is coming into paints and the competition is going to hot up. So adding at this point of time is out of question unless and until the company comes out with good numbers in the coming quarters. As far as holding your stock for long term, yes, you can continue to hold this stock for long term because it's no point booking losses at this point of time, because as it is a good company, but long term it can give good returns. So you hold to the stock. Adding is not advised at this point of time.
So can't advise an ad coming in on that particular counter. But moving on, then Venkat Jala is also writing to us from Hyderabad. Kunal is holding on to 400 shares, in fact, of Hindalco at a buy price of 110 rupees. What do you make of this one? Because he wants to know if he should sell 200 of these shares and invest this capital elsewhere. What do you make of that?
Yeah, I think it would be a good strategy for you to book profits over here. I would suggest to book at least 50% profits over here for the stock, because the only reason why I would suggest is because the weekly charts for Hindalco shows some sort of I would say a bearishness. I would not say extreme bearishness, but some sort of negativity building into the stock price trends. And indicators have come back into a slight negative territory for the stock on the weekly charts. That could result into the stock going into a corrective mode for maybe a few weeks or over the very near term. So I think since you're a long-term investor, you've purchased at a fantastic price of 100 or thereabouts for Hindalco. I think it's a good time where you could look to start in cashing on your gains. Book 50% profits is my advice for Hindalco.
Okay, book part profits and precisely 50% profit in Hindalco is the view coming in from Kunal. Let's move on. Rajesh, query coming in from our viewer Deepika. She's holding 10 shares of Adani Ports at a buy price of 1,498 rupees and 100 shares of GAIL at 231 rupees per share. She's a long-term investor, so her time horizon is pretty good. What's the strategy that she should adopt going ahead when it comes to both of these, Adani Ports as well as GAIL?
Yeah, we have an ad on both these stocks. Both are doing very well. Adani Ports is one of the biggest logistic player, I would say, with a whole lot of ports and all those things. They are adding capacities to it and it's doing very well. Going forward, going to give good numbers. These kind of falls are a good opportunity to buy for a long term. Add the stock. And even GAIL, it has corrected quite a lot from its upside, but going by the assets which are the pipeline, it has the kind of prospect gas industry as a whole, despite the fact that APM has been reduced. But I don't think that would be any effect to GAIL as such. So both are an ad from our side.
All right, so an ad coming in on Adani Ports right there. But the next one that we have is coming in from Vijay, who's also extended season's greetings to the team. Wants to know about Eotas. Is holding on to 593 shares, Kunal, at a buy price of just about 79 rupees. What do you make of this one? And he also wants to know if he should invest all of this capital instead in Reliance or L&T for that matter.
Yeah, of course, making a sense, that sticking towards large cap stocks or shifting from, high beta mid cap names towards large cap stocks could be always a very good strategy, because that would add to more solidity to your portfolio from a long term play, especially in the kind of volatile market environment we've been over the last 6 to 12 months for our markets. But I also believe that maybe timing it to a better point could be a better strategy. So for example, Eotas has been one stock which over the last 1 to 2 weeks has been showing signs of slight recovery in terms of volumes, slight positivity in terms of price trends for the stock price, which means that potentially in case if the stock finds some sort of maybe positive news flow, you might expect a pop towards 70-75 levels for Eotas. So shifting towards large cap names is of course a very good strategy, but my only concern is with respect to the timing. I believe if you can wait for maybe another couple of weeks and wait out for a point where the stock confirms a breakout, I think 70-75 zone could be a better zone where you can look to do the shifting or shuffling from mid cap names towards the large cap stocks.
So that's the take coming in on Eotas Small Finance Bank. Next question is for both Kunal and Rajesh, because our viewer Neha from Bangalore is requesting for a both technical as well as a fundamental view coming in on Bharti Hexacom. She's been holding this stock since a buy price of 1,150 and can afford to hold for the next 3 to 6 months. So that's what her time horizon is looking like. Could you both suggest the targets that you are seeing, Kunal, especially targets on the charts, and Rajesh, if you could give us a fundamental view or an overview of what you have on this stock?
So just to hold on to the stock, and if you're looking at a short-term target, since the price history is limited, just about some 7-8 months of price history so far for Bharti Hexacom. But looking at the charts, I would believe closer to 1600, 1620 could be a decent short-term target for the stock.
All right, so that's the target coming in as far as Bharti Hexacom is concerned. But Rajesh, what do you make of this one then?
See, coincidentally, even we have the same target of around 1600 odd levels in Bharti Hexacom is doing very well, but the only problem is the services in only some circles. It's better to be in the larger company that's Bharti Airtel, which is has good prospect. But for the short term, I think 1600 would be a decent target to hold on to Bharti Hexacom.
On Bharti Hexacom from both our technical as well as fundamental experts. But on that note, we'll slip into a very short break. Viewers, keep writing to us on the WhatsApp number that's flashing on top of your screen. We'll be addressing all your live queries just on the other side of this break. So you stay tuned. We'll be right back.
Welcome back. Thank you so much for staying tuned into Buy Now, Sell Now. Let's continue taking all of your stock-related queries. And the next one, Kunal, we have is coming in from Karthik, who's writing to us from Chennai. Wants to know about LIC Housing Finance. He wants to know if we can buy fresh into this counter after this kind of correction that the stock has seen. What do you make of this one then?
See, I would suggest to wait out for some more time. The resistance for the stock is around the 650 mark, and in fact, over the last 3 months, the stock has tried to come back to that 650 levels, but it's failed to provide a breakout. Now, the only missing factor for LIC Housing is the volumes, because even though when the stock was moving up higher, moving towards that 650 levels in terms of a breakout, the volumes were a lot more tepid for LIC Housing. So either it's the comeback of volumes, which as a factor you should be waiting out for, or as a breakout towards the 650 mark. Either of that happens, I think then it could be a very good buy. So risk reward wise, it may look very attractive, but what if the stock goes into a sideways range for maybe another 1 to 3 months? That's the only concern for a stock like LIC Housing. So I would suggest a wait for either of these two factors coming out for positivity for LIC Housing.
So that's a call coming in for LIC Housing from Kunal. Rajesh, coming to you now. Next query coming in from a viewer, Velavan from Muscat, Oman. He's holding Burger Kings, which is restaurant brand Asia, 200 quantities with an average price of 158 rupees. He's been holding this all the way back since 2020. That's the peak COVID here, with 50% loss currently. He's asking, what's the strategy going ahead, because he's already sitting on a 50% loss. He's a long-term investor and can afford to wait for a couple more years if this stock has the potential to give him a turnaround with a decent profit. What's your take over here? Should he continue to hold or time now to exit this?
See, the current number doesn't give any indication of a turnaround in the near future, I would say. The numbers have been pretty bad, doing not that great. It was a hype at the time of IPO, subscribed in number of times, and people jumped to buy the stock. The valuations are still stretched, and unless the numbers say something in the next few quarters, I don't think there are any hopes for a kind of turnaround the general manager. It's better to exit on any upside and rather switch to some other good names in the QSR space or a food space like Jubilant Foodworks or Barbecue Nations that are better in when you compare to Restaurant Asia. So I would say sell it, the stock.
So there are better picks in that particular space. So look at those picks coming in instead of Restaurant Brands Asia, and that's the take coming in from Rajesh. Kunal, I'm going to come to you with the next one because Shaurya is writing to us from Gurugram, wants to know about ICICI Bank. For the next 6 months, good buy?
Yeah, it's a very good buy from the next 6-month perspective. The stock is starting to look attractive in terms of momentum. The last 6 months, I've not seen this behavior for ICICI Bank, that the stock has been holding on to its 50-day moving average, something which tells you that 50 DMA thereabouts becomes a very good entry point for traders who are looking at a contra buy for ICICI Bank. We've also seen the stock being a lot more resilient. It tends to have a higher share in terms of the correlation with respect to the Nifty, Bank Nifty specifically. So I think all of these are positive factors, and that indicates that wherever ICICI Bank gets back into a recovery phase, the recovery could also trickle down to the benchmark indices as well as the Bank Nifty. So I think in that aspect and the retracement towards 50-day moving average at current levels for ICICI Bank makes it very attractive. I would suggest a buy.
Okay, so that's the take coming in on ICICI Bank. Kunal, coming to you now, we have a technical query coming in from our viewer Venu. He's a senior citizen from Chennai. He's holding 500 shares of PCBL, bought at 490 rupees earlier this month. What's your take coming in? His outlook is for 6 months. So what should he do? What's the strategy here?
I think you should continue to hold on. The indicators are still into a positive territory for Philip Carbon. I think recently also the stock had recovered from sub 400 levels towards 475 or 480 thereabouts. So it still looks attractive. The stock is trading above its averages the volumes have been a lot more constant. I believe it's a matter of time that you might probably see a very strong up move for PCBL over the next 1 to 3 weeks. So I think even if you have a shorter term time frame, you should continue to hold on. And since you have a time frame of 6 months plus, I would believe that you could potentially see an upside closer to 550 to 600 levels for PCBL.
All right, so that's about PCBL, and that's the take coming in as far as that stock is concerned. But Rajesh, I'm going to come to you with the next one because Indian Hotels is what Rebecca is writing to us about. Firstly, she wants to extend season's greetings to the entire team, and her stock is Indian Hotels, 50 shares, buy price at 561 rupees. Should she be booking profits or holding on for the longer term? What do you think?
Thank you for your greetings, and we heartily reciprocate that. Happy Christmas and Happy New Year to you too. As far as the Indian hotels are concerned, I think it's a buy from our side. We have given a buy call in the recent past to our clients too and on media channels too. The company is doing very well, adding rooms not only in India but abroad too. The number of hotels are being increased. Average room rent has gone up with the kind of wedding season we have witnessed in the recent past. This quarter numbers are going to be too good. And with the kind of shortage of rooms in the country and with the kind of travel and tourism picking up, I think it's a long way to go. It's a good brand, Taj Group. So one can even add Indian hotels at this point of time.
Call coming in on Indian Hotels from Rajesh. Kunal, coming to you now. Next query coming in from our viewer Krishna is writing to us from Hyderabad. His query is on the stock HCC. He bought it at 41 rupees per share. Currently somewhere around 39 rupees per share is what that stock is. His outlook is only very short term. Only a 1 week outlook is what he's asking for. What's your view on this query, and what are the levels that you are spotting for this stock?
See, it's a tough one because the stock just recently in the last 2-3 days has started to look a lot more negative, especially with the break below the 45 mark. Prior to that, the stock was looking fairly attractive and it was on the back of higher volumes. Seen the stock moving up from 35 to almost 45, 47 levels. So maybe over the very short term, over the next maybe 3 to 5 days, I might my expectation that the stock may correct back towards 37, 37.5 levels. But if you can probably extrapolate a time frame from 1 week to say 1 month, then there could be a possible or a potential recovery back towards the 40-45 range for HCC. So it depends on whether you can extend your time frame or not.
All right, and that's the take coming in as far as HCC is concerned. So the next one that we have, in fact, is coming in from Kumar, who's writing to us from Kerala, Rajesh, and he wants to know about Crompton Greaves. In fact, he wants a combination view on the counter. But firstly, I'm going to come to you. What do you make of this counter?
It's a good company, no doubt, doing very well, and with the kind of infrastructure movement that we are expecting in the second half of the financial year, just because government capex was almost nil in the first half. I think the company is going to do well. Hold at this point of time, book profit around 425, 430 odd levels.
I'll give us a tech check on Crompton Greaves as well.
Yeah, I think it's been an attractive chart so far. I think at current levels of 390, thereabouts, 390, 394, the stock is holding on to its 200 DMA quite precisely. So I would suggest a buy as well as a hold on Crompton Greaves. If you're looking at a fresh entry point, then I would believe a potential target from a short-term play could be kept at 425.
All right, so that's a combination view coming in on Crompton Greaves from both Rajesh as well as Kunal. But the next one that we have, Rajesh, is coming in from R. Ganesh, writing to us from Bengaluru. Wants to know about the 100 shares of IND Bank that he's holding on to. Buy price is 1,150 rupees. What do you make of this one?
This has been one of the worst performers in recent times. After the results came out, the results were pretty bad. But we should not forget that it was just because of one-time write-off, because of the MFI business. And in the short term, I think that MFI business is going to be a pain for the IND Bank, not only IND Bank, but the entire sector as such. But looking at the valuation trading at almost one-time price to book, I think it's at an attractive level. Short term, it's difficult to predict how much more correction is left. But for a longer term horizon, I think one can add in a staggered way for a target of 1,200 odd rupees in the next 12 to 18 months. But once again, I would like to repeat, short term, it's really difficult to put the numbers, how much more correction is left. But for longer term investors, staggered buying can be suggested.
On IndusInd Bank. Rajesh, coming back to you for our last query that we'll be addressing on the show today. This is coming in from our viewer Bala from Chennai. Two stocks that he wants your opinion on is Jio Finance as well as L&T Finance. Do they look fundamentally sound to buy right now? What's your view?
See, both are fundamentally good, no doubt. But given a choice, I would go with Jio Financial Service. Although at this point of time, there is no meaningful business in the company, but long-term horizon looks very good with their holdings in Reliance Industries, Treasury holding, which is again almost half of their market cap, with the big names like Mr. Kamath, Mr. Chiranjeev Singh, Atra, and all associated with that. They have made a joint venture with BlackRock for mutual fund and other businesses moving big in insurance. I think this is one company which one should have a look for maybe next 2 to 3 years. But only thing is you have to have a long-term horizon into this. Buy Jio Financial.
All right, and that's the take coming in as far as Rajesh is concerned for Jio Financial Services. Managed to take over 30 queries on the show. Thank you so much, Kunal and Rajesh, for joining us. But with that, completely out of time on this edition of Buy Now, Sell Now on ET Now. Don't go anywhere because Markets at Noon takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.